Hello, guys, and first of all, I want to wish you happy 2026 and do every goal that you decided to do. And let's start with American economy summary. So let's start with inflation. The annual inflation rate in the USA came in at 2.7% in December 2025, the lowest since July, below forecast of 3.1% and reported for September. Inflation is still above Fed's target of 2%. And during October, we didn't have inflation report because of the government shutdown. But as you can see, we have cooling inflation, and if we still continue to have cooling inflation, if next inflation comes at 2.6 or 2.5, that is reason to that's the reason why Fed could still cut rates in 2026. Labor. Rising unemployment rate. The US unemployment rate increased to 4.6% in November 2025 from 4.4% in September, exceeding market expectations of 4.4% and marking the highest level since September 2021. So we are sitting at the highest level since 2021, and that is concerning because higher unemployment rate means less jobs is created, less purchasing power, less inflation, lower GDP. Fed needs to cut rates. In private sector, employers added an average of almost 12,000 jobs per week in the 4 weeks ending December 6. Non-farm payrolls. US job growth totaled 64k in November compared with a 105k loss in October and market expectations of 50k increase. So this is mixed data overall. We are not growing. US economy is not growing, neither is falling. It's stagnant right now. Employment rose in healthcare and construction in November, while federal government continued to lose jobs. In November, healthcare added 46k jobs and construction 28k jobs. ADP, private business in the USA cut 32k jobs in November 2025, following an upwardly revised 47k gain in October, and compared to forecasts of a 10k rise. ADP is falling apart. It is the biggest decline in payroll since March 2023, led by a 120k drop at small establishments, and this is concerning because we are at the lowest levels. PMI data. Manufacturing PMI was confirmed at 51.8 in December 2025, down from 52.2 in November, marking the weakest expansion in the current 5-month growth phase. New orders declined for the first time in a year, while exports fell for a 7th consecutive month, weighed down by tariffs and trade frictions. So the tariffs are put because of the tariffs. US economy is not doing that good. Services PMI fell to 52.9 in December 2025 from 54.1 in November, missing the market consensus of 54 according to the flash estimate. As you can see, in both scenarios, going lower and lower. The reading marked the slowest pace of expansion since June 2025, indicating a moderation in the service sector. GDP. The GDP in the USA advanced in an annualized 4.3% in Q3 2025, the most in 2 years compared to 3.8% in Q2 and forecast of 3.3%, the delayed estimate showed. And somehow we saw like this is very, very good GDP data. And the US economy expanded 2.3% year on year in the third quarter of 2025, higher than 2.1 in the previous estimate. And now FOMC interest rates chart. Inflation in focus. Minutes from the Fed's December meeting noted that most of the FOMC judge that rate cuts are likely to be appropriate next year if inflation eases over time. So inflation is focus. If we see like falling inflation, there is more room to cut rates. But there is also split between Fed. Policymakers remain split. Some fear entrenched inflation may require higher rates for longer, while others favor deeper cuts to address a softening labor market. So they are split. We will see what they will do. Economic assessment. The Fed noted that economic activity was expanding moderately, but job gains had slowed and unemployment had risen modestly. Inflation remained above target, about 2%, though officials saw some easing pressures. The committee remains attentive to risk to both price stability and full employment. Forward guidance. The statement emphasized careful monitoring of incoming data and risk before making further adjustments. So this is period of sit and see. We need more data to like structure the plan of executing. Overall stance by Jerome Powell was merely dovish or neutral. Dovish elements: the Fed cut rates again and acknowledged softening labor market conditions, signaling support for growth. Neutral elements: Powell and the committee stressed data dependence and did not signal an imminent aggressive easing path. They emphasized cautious and monitoring before future cuts. Not hawkish, there was no indication of tightening or rising rates, and the focus remains on supporting the labor market and easing pressure if inflation continues to moderate. Economic summary. We saw labor data cooling, inflation is cooling, GDP is still strong. This is like my view. Still anticipating dollar weakness into early 2026. The labor market continues to cool, which reduces wage pressures and feeds into disinflation. As inflation trends lower, economic growth softens, reflected in weaker GDP momentum. In response, the Fed is increasingly forced to shift toward rate cuts to support growth, reinforcing a broader easing cycle and putting downward pressure on the dollar. This is like fundamental analysis, and in this technical analysis, I'm looking these two areas to shorts. Like this is 98.5 level, I think, and this is about 99.2 level because of this was previous support of resistance, and we will see if this can be resistant again. Also resistance, support, resistance, and from here I will also look to shorts. And in this is the nutshell. So during this time we were in consolidation because of the summer holidays, and in September the Jerome Powell was dovish and there was anticipation of rate cuts, and we saw lower dollar. FOMC meeting was that day, and sentiment was no rate cut in December, so the Fed was hawkish, and with good data we've been in bullish uptrend, and around this area or around these levels we started to see weak data from labor market. This is where Fed has the focus right now, on the labor market is focus, and because of the weak data we started to see down pressure. Sentiment is now turning for rate cuts in December. And right now we've been in consolidation of Christmas and New Year holidays. And thank you for your attention. I hope that you like this format and you learn something new, that you have clear like view on dollar, and see you in the next video.